Okay. This should be good. Live. Okay, cool. So that's good. Share this. Go over here and share this. Cool. So we are live. Got the YouTube message. Awesome. Good to go. Of course, tell me guys if you can hear me loud and clear, and then we'll go ahead and begin. And yeah, quite a bit I want to talk about. Let me know if you can hear me. And I got a new headset, a new microphone, but I think you guys should be able to. Awesome. Thanks, Peter. All right. So yeah, there's a lot I want to talk about in the market setups. I want to go over Bitcoin, Ethereum, Doge, just pretty much all the altcoin setups and pretty much what's going on in the market. I know a lot of you guys have been waiting for a live stream. I've just been super busy, but I just wanted to kind of give you guys a better understanding. So let's start off with Bitcoin, and then we'll kind of make our way down the list. But let's go with Bitcoin first. Now, of course, Bitcoin, you can see, is hovering right here at 99,000. Of course, we're about, give or take, about $700 away from the big $100,000. Now, this is a huge psychological level, but I've talked about this before on Bitcoin as well, is a $100,000 zone is going to be a major zone for a lot of people. Now, this, of course, can be taken two different ways. The number one way is, of course, 100K hits, everyone panic sells, and it sees that cascade down. Or we see a breakthrough of 100 and we continue pushing higher. And you can see that as of right now, even earlier this morning on the scalp position on BTC for the scalp shorts, right now, there's still a ton of bullish pressure. That's why I keep telling you guys, if you're looking for trade setups, you want to be very aggressive. Because right now, both ways you see it, Bitcoin, of course, is extremely overbought and you don't necessarily want the flush. And just like from a shorting perspective, you don't want to see yourself get trapped on these positions and then Bitcoin continues pushing higher. That's why we continue looking for scalping zones. Now, the question, of course, becomes is, where exactly is Bitcoin going to drop? And this is where the exponential moving averages come into play. You can see that as of right now, pretty much this whole run through towards the upside, we've been respecting the exponential moving averages from a long position. And again, over time, I told you guys this right now, every single time Bitcoin ends up breaking wick high, you just enter a long position. It's a very simple strategy. And you can see, of course, that when you're at all-time high, a lot of people say, I don't know how to trade all-time highs. I don't know what to do. I'll give you a few examples here, right? So you can see at 94.969, there was a wick high right here. Market ended up breaking, created a new wick. And then again, same sort of situation here. Market ends up breaking that wick, you enter another long position. Here's another one. Market ends up breaking. Here's another long position. And you guys get the point. As Bitcoin continues to rally, there are multiple areas where you can look for those long positions. Every single time a wick high is broken, you just enter a very nice long opportunity. Now, the current area that we're currently looking for is, of course, the $100,000 region. Now, if 100K, of course, ends up getting rejected, so if we end up seeing 100K rejection, a lot of folks are going to be entering a ton of short positions here because, again, the 100K is where a lot of people psychologically are going to look for trade setups, right? 100K is going to be the make it or break it for Bitcoin, or as everyone says, the doom and gloom, the big 100K everyone's been waiting for. And that's why everyone thinks it's going to be a sell the news event. Now, in my personal opinion, if we end up breaking 100, then we are probably going to see a much larger squeeze. And that's why, is because of the fact that if we see an invalidation zone, a lot of people are going to get trapped on these shorts that are being laddered in as of right now. We're not really looking for short positions here, right? So we're not looking for short positions as of right now. We already played the exponential moving average break. We already scalped it earlier this morning. And right now, we are not interested in a re-short. And the reason why I tell you guys is we're not looking for a continuation right now, right? So a lot of you guys are saying, oh, Pingu, should we short here? It's 100K. We're right there. The fear greed index is pushing, everything's going up. Like, should we sell? Should we short? Should we short? No, there's no reason to short unless we break below the exponential moving averages and retest them as resistance. And I promise you guys, when that happens, we are going to be the first ones that are going to be shorting. Otherwise, just let the market do its thing. I've been pretty much chilling with you guys. I haven't been really pushing too much in terms of trade setups as begin. I am trying to make sure nobody gets trapped out, right? I don't want anyone getting trapped from a long or a short perspective, so I'm being very cautious with the trade setups that I'm sending. For example, on Cardano yesterday, right? So speaking about wick high, I told you guys, look, if Cardano ends up breaking wick high here at 84.91, this was a trade setup. If it ends up breaking above that zone, we are going to see a massive squeeze. The reason why I knew that was going to happen is because XRP was seeing the same amount of squeeze pressure. These altcoins right now are on easy mode. This is the easiest money you are going to make. And the reason why is with Bitcoin trading at 99,000, a lot of these altcoins are still playing catch up. What that means is if you look at the previous price analysis on altcoins, you can see that Cardano still has a long way to go. A long way to go. Sorry, give me 1 second, guys. Sorry, 1 second. Yeah, so you can see that Cardano right now has a long way to go, right? So you can see the all-time high for Cardano was around $3. Right now, Cardano is just breaking out of its long-term consolidation. That's why when people say, oh, Pingu, it's so high, what should I do? The point of the conversation is we are still scalping. We are still looking for these wick high breaks on Cardano and continuing for long positions. Yes, I understand that if the market ends up turning around, if Bitcoin ends up dropping, altcoins will drop as well. But that's the whole reason of scalping, is we are entering the market as we go. As it continues breaking higher, there's no reason for you guys to be holding your trades for too long. Now, looking at the current 4-hour structure, even on Cardano, right? We are extremely overbought. We're completely over-leveraged from our exponential moving averages. You guys are always saying, oh, Pingu, I don't know when to close. I don't know when to do this. Like, think of it from a logical perspective. If Bitcoin's sitting at 99,000, Cardano still has a long way to go. Does that mean that you're going to hold your long position all the way from 84 cents to $3? No. What that means simply is the fact that you are going to enter these wick high breaks. Every time it enters a wick high, you enter a long position, and you are slowly putting your stop loss higher in profit. As it continues rallying, you are slowly putting your stop losses in profit and riding the whole wave towards the upside. Because by doing so, if the market ends up rejecting, if Bitcoin sees a flush or anything like that, you are not holding these trades for long term. You're literally just riding the wave upwards. Small little pullback, ends up closing the trade still in profit. Now, one coin that I've been heavily focusing on is, of course, Doge. Doge is probably one of the only coins right now that is of interest to me in terms of a long setup. And the reason why is because of the fact that everything else is pretty much flying, right? Doge was the first one to have its initial break above. So everyone keeps saying, oh, Doge sucks, Doge is lagging, Doge is doing this. No, the reason why Doge is lagging is because it already had its initial run-up with Bitcoin. It already had a massive run-up from 17 cents into 40 cents. And now we are seeing the consolidation on Doge. So if Doge were to see a wick high break, and I told you guys this before, we are not entering any position on Doge unless that level ends up breaking. That's the level I want to see on Doge break. You can see that even today, we got 0.146, but we didn't get break above. We didn't get the break above, so there's no reason to enter the trade setup, right? I don't care if it's closed. I don't care if it's a penny off or 5 cents off. I don't care. It has to hit the wick and break the wick. That is the point of a trade setup. And I'll give you the example on Cardano. You can see on Cardano, it broke the wick, and then, of course, we saw the initial rally. I keep telling you guys this, but look, yes, the market is volatile. The market is going to continue being volatile. The question, of course, becomes is if you're entering a 50x leverage on break, and then, of course, it moves a little bit and then starts reversing on you, why are you entering a 50x leverage trade? That you don't need to trade high leverage when volatility is already there. And that's what I keep trying to explain to you guys. The market is already volatile, right? We are already seeing all these altcoins rally some insane amount of percentages. Why are we using 50 or 100x leverage? The only time you would use those, and again, most times it's gambling, but if you are using 50x or if you're using 30x or whatever, you are only doing that if the market is calm, if the market is consolidating and you're trying to get as much as you can in that consolidation. When Bitcoin is rallying like this, and Ethereum and basically all these coins are rallying like this within the, give or take the 24 hours, Bitcoin was sitting at 95 and now we're at 99. That's a $4,000 increase. If we're already seeing such a large increase across the board, there's absolutely no reason for you to be using 30, 40x leverage. It's gambling. You are better off using 10, 15, 20x max and riding the waves, because again, I keep telling you guys is if the market were to flush from here, it's going to cause a lot of panic. there's going to be a lot of panic in the market because you can see we started at 69,000 during the Trump election. You guys remember that trade? That was a massive trade opportunity for us. And since then, we have not had any corrective move. And this is what I told you guys a few months ago when we were talking about all-time high and what to do in those situations. And I told you guys, look, the market is going to do its thing. It's going to end up breaking all-time high, and it might not ever come down. And what I meant by that, of course, was a previous bull run that happened on the daily structure. For those of you that remember, you can see, and I gave this example to you guys a long time ago, is I was the guy who shorted the all-time high in last cycle and got liquidated, right? I give you guys that example of why I don't look for all-time high shorts, because if the market ends up breaking out, it's a very risky trade. You can see right here, all-time high at 19.8, Bitcoin broke above, but look what happened next. Look what happened on Bitcoin since. It went from 19 all the way into 42, and then it had the flush opportunity, right? But then again, it continued rallying over and over. The conversation is, it never got back to that 19,000 until pretty much 2 years later, and then you were break even or in profit on your trade. That's why I tell you guys, when we are in a bull market like we are now, and you are breaking all-time high and you are rallying over and over, you are much better looking for long positions for swing setups than you are looking for short positions for swing setups. The market, nobody is going to be able to tell you when the market top or when the market is going to bottom. But instead, if you are a directional trade, so what that means is if you are looking for long positions as the market continues rallying, you know that you're getting the direction of the market right. So regardless, so let's give you an example. Let's assume you entered a long here at 94,000, right? Market, you entered a long right here. Whoa, you saw your first red candle, drops down to 93. Is there a time for you to panic? No, because again, the only time we would panic is if we closed below the exponential moving averages. Otherwise, this is simply just noise. You can see, and you can see it from two different perspectives, and this is the beauty of trading, right? You could have seen this as, okay, we broke above 93,475 as resistance, and then we use that level as support. So now you can see resistance turning into support, and now we are looking for a continuation trade. So that's one way to see the trade setup. Number two, of course, is although we are still trading like near the resistance, we are still above our exponential moving averages. So that's the second way of seeing the trade setup, right? So that's two bullish confirmations versus someone that's seeing this trade setup and saying, okay, so we're up resistance, or overbought on the RSI, and I'm gonna enter a short position because it's starting to look like it's gonna go down. Starting to look like versus what is actually happening are two different things. That's what you need to understand. Bitcoin right now is the leading king. It has dominance. Obviously, there's enough money being flowed into Bitcoin that there's no reason for you guys to be panicking with Bitcoin. The only time we would panic with Bitcoin, of course, is below the exponential moving averages. Everyone keeps talking about Ethereum. Now look at Ethereum, right? I told you guys, if Ethereum were to break below 3014, then yes, we would look for a short position. Otherwise, let the chop play. This, of course, was just chop, right? We were consolidating, and then we saw a massive breakout on Ethereum. Ethereum still has a long way to go to all-time high. It's still not even close to all-time high, right? All-time high was around $4,028. So when you see it from that perspective, you have to understand Ethereum is one of those coins that is going to see a lot of choppiness and volatility. Like right now, you can see that, yes, the wick high on Ethereum on the 4-hour time frame played perfectly, right? I told you guys this in the Telegram. Look, the wick high right here, so that most likely where the 3,400 range is where we're going to see Ethereum go. It ended up playing perfectly there. And now Bitcoin is rallying, but Ethereum is starting to drop. That is my point, is because Bitcoin dominance continues to rally. Altcoins will not have a season until we see Bitcoin dominance drop. And once Bitcoin dominance does drop, then you are going to see some massive gain opportunities. And I'm being genuinely honest with you when I say what we're seeing. Oh, sorry guys. What we're seeing on Cardano, what we're seeing on XRP, what we're seeing on XLM, what we're seeing on Pepe, These coins, the rallies we're seeing right now, aren't even close to the rallies we're going to see in altcoin season. This is just a small run compared to what's actually coming. And that's where the easiest money of your life is going to be made, is in altcoin season. And the reason why is because as leverage traders, we have the benefit of entering and exiting the market whenever we want to. That is the benefit of leverage. If you're in a spot position and you get stuck on a spot position and the rest of the market it's going up, then you're stuck on you're stuck on a spot position and you don't know, like that's where the question comes, what do I do? But as leverage traders, we have the ability to hop in through coins as we please. And the beauty is when you have an altcoin season with Bitcoin dominance dropping, you are going to see a massive opportunity for yourselves in trades. And the reason why is because what we're seeing on XRP, what we're seeing on Cardano is just a glimpse of what's going to happen across the board. It is going to be one of those situations where you simply just enter a long position and it will continue running over and over and over, and we are going to make so much money that you're going to be wondering, why exactly is this happening? How is this so easy? That is what altcoin season looks like. And if you guys want a perfect example of this, I can show you on Cardano. So look at Cardano here on the daily time frame, and you can see that during the previous bull run, right? During the previous bull run, Cardano had the same sort of situation as of right now. We were trading at 3 cents. We broke above 16 cents. Everyone's making money. Everyone's super happy. And it continued going and going and going. And then what happened? Well, when Bitcoin dominance fell, so as soon as you saw that nuke on Bitcoin, which I'll show you again later, you can see that Cardano within a few days went from 44 cents into the highs of $1.48 into the highs of $3 at peak. That is the point of altcoin season. And that's not just Cardano that did that. There was a lot of coins that repeated the same sort of process. And of course, you guys remember Doge. Doge did the same thing during the previous bull run. You can see the same setup right here, the same massive candle. Shiba, the same exact setup, the same exact massive candle right there, all the way to the peak. Every single altcoin setup is going to look exactly the same. And the reason why is because when Bitcoin dominance ended up dropping, we saw a massive altcoin season. And guess what? The people that made the most money during that time were not spot traders. They were leverage traders that, of course, caught the bottom of those trades, and they entered, and of course, they knew that Bitcoin dominance is dropping, and they ended up making a massive amount of money, and they ended up holding those trades pretty much the whole bull cycle. There will come a time when we stop scalping and we start swinging, and that's my point, is right now, there's no reason for us to be swinging altcoins. We are scalping and we are making an insane amount of money, and we are going to continue scalping the market, but there's no, the time for swing trading happens when, of course, the market ends up calming down, dominance ends up dropping. That is when we start seeing a massive utility run. That is when we see altcoins go parabolic, and that's where we are going to make the most money. And again, I'll keep you guys posted in Telegram. It is free for anyone that is joining, but I will let you guys know when it's time. I will let you guys know when it is time to buy your favorite spot coin positions. Right now, what we're seeing is a few select coins seeing a massive run. And I'll give you a perfect example of this. You guys remember Beam, this altcoin that I gave you guys a while ago? But look at some of the altcoin setups. Like, these charts are pretty much just straight sideways still, right? We are not seeing the setup, like same thing, even ICP, you can see it's just straight sideways. Even IMX, same thing, I zoom out, straight sideways. I'll just give you another one. Here's Injective, right? Same thing, it's straight sideways. These are the setups that are, of course, presented in altcoins, but there's no confirmation. There is no confirmation. If Bitcoin ends up dropping, these will also tank. That's why I've been very cautious with saying, okay, guys, the green light for spot coins, everyone go buy your favorite spot coins. Like, yes, long-term as holders, if you are in a coin and a project you believe in, that's totally fine. You are a long-term trader. You are okay. But for someone who's not a long-term trader, who, of course, wants to enter the market at the right time, or even leverage trade, there is no confirmations right now for us to be looking for these altcoin setups. Right now, we're only focusing on Bitcoin, Ethereum, and maybe Doge sometimes if we get the trade setups. The reason for that is because the market right now is still using these three as the main runners. Bitcoin continues to rally. Ethereum continues to rally, but there's opportunity with Doge and Ethereum because they're not even close to their all-time highs. When you start talking about tier 2 and tier 3 coins, it is a game of gamble right now because Bitcoin dominance is high and these coins may not run for the next few months. So there's opportunity cost in that as well. So that's why I tell you guys, look, I don't care about your favorite coin that you want me to go analyze and think. I'm not trying to be rude. I obviously am here to help you, but I cannot look at every possible trade setup and coin out there and tell you, okay, this is a good idea, because right now they are not the market conditions we want to look for. And the question, of course, becomes, oh, but wait, Bitcoin's at all-time high. What do you mean? Bitcoin is at all-time high. Bitcoin dominance is continuing to push, but that does not mean altcoins are ready for their run just yet. Yes, in time, there will be an altcoin run, but right now, we are not focusing on that. We are focusing more on Bitcoin and Ethereum and trying to lock in those gains. So I hope that makes sense. So again, so the question, what do you think is going to happen, Doge, in the next 48 hours? I tell you guys this all the time. I don't have a crystal ball. Okay, I don't have a crystal ball. I don't trade like that. The only trade I do is from a technical analysis. I don't know what's going to happen in 1 week from now. Anyone that sits here on YouTube and says, hey, this is going to happen in a week, or on this day, Bitcoin is going to do this, or on this date. No, that's not how it works. Nobody can tell that. All I do is technical analysis on the 4-hour time frame. And for me, Doge is not in a trade zone unless, of course, we end up breaking above this wick high right here. So this wick high right here on Doge is 42 cents. That's the only time I will look for a long position. Otherwise, I'm not trading it. And I'll give you the example why. Is because if Doge right now sees its consolidation like this, and all of a sudden Bitcoin flushes and Doge breaks below the exponential moving averages, what do you think is going to happen? Now let's assume Doge did this. Well, this is a very scary sight, right? Because now Doge is going to go ahead and go back down and retest the 35-cent support. The same support level that's been tested multiple times. If that support level ends up breaking, Doge is going to see a massive cascade down to 29 cents. And that's why I tell you guys, consolidations are very risky to trade. It is not worth your time to trade consolidations. Let the market come to you. And once the market comes to you, then you can enter your trade setups. If the market is still chopping sideways, there is no trade setup. I don't care how good the chart looks. And that's my point of the conversation. I keep trying to tell you guys this, and a lot of you guys are not listening. Every time I go look in the mentorship groups, or of course even the whale chat, sometimes I notice messages and I'm like, why? Why are there trades happening when there is no setup? For example, Doge, should we look for a long position? No, there is no long position. Why? Because this is a no trade zone. Yes, technically speaking, we're above the exponential moving averages. We're continuing to retest a major resistance, but the gamble is, of course, the fact that if Bitcoin were to see a flush opportunity from here, you don't think Doge is going to see a flash crash as well? And the same thing. I sent this message to you guys earlier about patience in Telegram. You can see the reason why I said be patient is because Doge looked like it was going to hit 42 cents. And the conversation, once again, is if it looks like it's going to happen versus what's actually happening is two different conversations. It looked like it was going to break out, so I entered a long position, versus Pingu, it actually broke out, then I entered a long position. That is the point of the conversation. I don't care how it looks, because again, with 4-hour time frames, it can switch very fast, right? And I'll give you guys an example of this. When we initially, so let me dissect the 4-hour trade for you. When we initially broke above 0.40, we took a long position, right? And I said, look, Bitcoin is rallying, Doge continues to use the zone, so this is the wick high I want to be paying attention to. We entered a long position, and then we saw Doge go all the way up to 42 cents, and I kept saying in the Telegram, be aggressive, be aggressive, be aggressive. And the reason I was saying that is because if the candle closed below 40 cents, right? So number one, we traded the wick high because we knew that this was the wick high, so we knew the fact the trade was going to break above, right? So that's what you know. What you don't know is what is going to happen after. Within 4 hours, anything can happen, right? So what you don't know is whether or not the trade is going to end up holding above 40 cents or if it's going to close below 40 cents. That is the unknown. So as traders, if we are breaking out, we entered a long position on the wick here, what do we know? We know the fact that the wick ended up breaking, so we're going to take a long position. The question becomes is, okay, how much is enough? If I'm looking at it from this perspective, and this is why I always say be aggressive, is I know there's a ton of resistance in this zone. Nobody knows if Doge is going to break that zone. But what we do know is the initial break is where the profits are going to be. What happened after? Doge did its moveset, came back down, and look, it broke below the 40-cent range, and then we saw a rejection. Now looking at it from this perspective, is this a bullish setup right here? Or is this a bearish setup, right? Because now looking at it as traders, we're going to see this differently. Before, the people that said, oh, this looks good, it looks good. But now, it does not look good, right? And that's the point of the conversation, is anything can change within 4 hours. Now looking at this trade setup as traders, most times people will say, okay, so there was quite a few wicks opportunities here. Doge ended up rejecting. We actually closed below the 40-cent range and we're completely over leveraged from our exponential moving averages. We are also overbought. Now the same setup has now turned into a bearish setup on the 4-hour time frame, and that's just because of how the candle closed. Do you guys see the importance of why candle closes are so important? Is because of the fact it changes the technical analysis. I keep telling you guys, let the candle close. And the point of the conversation is if we see a wick break, so again, on Cardano, we saw a wick break, we enter a long position, right? So there's multiple wick opportunities, but I'm just talking about yesterday's trade. Yesterday's trade, we saw a wick break, right? And then we enter a long position. This was a very nice trade setup for us, right? It went from 84 cents to 88 cents. Very nice 4-cent trade. 4-cent trade on leverage is amazing. So we entered a trade, and I told you guys, be aggressive, be aggressive, be aggressive. The candle closed above, but again, you can see the very next trade, so the very next trade set up on the wick high break, if you entered at 88 cents, you got maybe 89.8, and then you saw a rejection down. So this is where the hard part comes from scalping, is knowing when it's enough. The first break that we had at 84 cents, it was a much better trade setup, is because there was a lot of rejection within that zone. Now we are trading the breakout, which of course happened, but the risk aspect of it is you are now trading a breakout where you are already overbought and you don't know if the trade is going to reverse. But you can see, then the next trade setup, and that's my point, is when you're trading breakouts, you have to be very mindful of where you are on the current trade setup. So right now, if I'm looking at Cardano, a lot of you guys are probably saying, Pingu, why didn't you call this? Why don't you call Cardano? Like this is breaking wick long, right? Why don't you call Cardano? The reason why I'm not trading anything anymore right now as of today is because on Cardano, sure, we're testing the wick high. Can we look from a long perspective? Yeah, we could, right? Because again, the rule of thumb is as long as we're above the exponential moving averages, we continue looking for long positions. But the problem here is the fact that Cardano has already seen such a massive squeeze from 77 cents into 98. Is it worth the risk to reward if now, of course, the trade rejects? That's the point of the conversation, is you always have to keep in mind the worst case scenario. And right now in Cardano, it is not looking too hot, right? And again, later tonight, we might just see Cardano continue breaking out. Great, because technically speaking on the daily, $1.22 is the next zone. But again, this is where I explain to you guys, look, if I'm being a mindful trader right now, yes, 98 cents is a major resistance, or sorry, the 122 is the next take profit. But look what happened to Cardano on the daily setup. Do you see the amount of wicks here, right? So all these little wicks, that means that this was a major support. So what does that mean for Cardano? It means that it's going to be acting as a major resistance as well. If it breaks out from that perspective, then yes, $1.25 is there and nothing is going to stop it. I gave you guys that example on XRP a long time ago, remember? I said, look, if XRP ends up breaking above 84 cents, there's nothing stopping XRP from $1. And the same sort of setup could have been used on the daily time frame for XRP, because now you can see they just broke above $1.36. The next major resistance are in $1.80, $1.90. There's nothing stopping XRP from continuing to push higher. And that's how you can use technical analysis to your advantage for even when you're in spot positions and you want to exit those positions. You can pay attention to the wick highs and know, okay, look, if this hits the wick high, I'm going to exit this position here. That is the point of the conversation. If you're someone that's still confused and still doesn't know how to do it, then start learning how to use technical analysis to your advantage for, of course, spot trades or leverage. But that's how I know, for example, when to take profit. So we can talk about Ethereum real quick. On Ethereum, and this is again, I'm going to be transparent. We didn't take this trade. I'm not going to say, oh yeah, we were long here. No, we didn't take this trade because this is when I said I'm going to bed. I pretty much missed this trade setup. But just from a technical analysis point, if you were paying attention, you would have noticed that, hey, the 32.17 is major resistance, right? So this is major resistance. If this ends up breaking, it's going to squeeze. We saw the break, and all you had to do was just pay attention to the next wick high. If you are in this trade setup, you can see it hit all the way up to 33.69, but then it came back to 32.79, and then it went to 3400. That is the point of the conversation, is you have to be careful with your trade setups and entries. If you see the trade already break, and then you enter late, and then it starts to reverse, that's not a time to be emotional and start closing your trade, because again, the overall level is what I give you. That level ends up playing. You guys want a perfect example of this? I'll show you. Remember Solana yesterday? And this is, of course, when I was busy, but I still gave you guys a setup. And I said, look, this is a perfect trade opportunity. Let me show you guys. On Solana, again, I said, if Solana ends up breaking out from its wick high, so look at this chart here. I said, if Solana ends up breaking apart from its wick high, which was right here at 248.41, and I gave this in Telegram for you, I said Solana is going to squeeze to 257. That's the next zone. You can see that Solana did end up breaking 248, and we did see a trade set up into 252, but then it came back down and closed again at 248. The trade setup is still there. 257 was the next level, right? So that was a level I gave you guys in Telegram. That is still the next level. Regardless of how you feel, that is the next level. Sure, we could have seen something like this, right? And then the level trade. But that's the point, is all of the opportunity that happens in between. If the level is there, the direction is there, it's very hard for you to lose money. And that's why I tell you guys, I'm not a signal provider, but I will give you the levels ahead of time so you know when to take your profits completely or when to stop scalping within that range. Tips on how we should scalp properly, and notice my stop loss is either trigger too early and I feel pressure to hop back in, or set it too far and miss out on profit. So again, leverage trading, scalping is very hard to do. And I'm being honest with you because again, it is an emotions game. Because I'll explain to you guys in very detail here, right? So same thing. We'll give Cardano the example. On Cardano, you can see that if the 84-cent range broke out, we don't know how far the breakout is going to be. Nobody knows, right? We've seen breakouts like this. We've seen breakouts like this. Nobody knows that. But the point of the conversation is not how far it's going to break. The point of the conversation is how much is enough. And that's the hardest part for a lot of traders, is the greed aspect to it. So as traders, if you're looking for a breakout structure, and let's assume you missed a trade, right? So the trade was at 84 cents and said if the wick high is about to break, pay attention. And you come back 30 minutes later and now you see this, right? And you're up here. Is it smart for you to enter up here when it already broke? No. That's why a lot of traders are failing scalping. It's not because that the trade setup was wrong. It's because you are entering too late. Now, assuming you entered down here and now you are in profit, right? So the trade setup does end up making profit. What do you do at that point? Well, there's two ways to do it. Number one is you enter the trade on the break and you put your stop loss in profit as it continues to rally. But number two is just take what's on the table. A lot of you guys take it too literal. So if I say Cardano is going to $1, you assume that this break on 84 cents is the break to $1. That's the biggest problem a lot of you guys have. You have to understand that yes, although Cardano's take profit is $1, it's a 4-hour interval. It's going to take time to get to that point. So if you're scalping, if you are up 20%, 30%, 40% on a trade, just take the profits. Because why? Because you are locking in the fact that you are up 40% for the day. You are locking in that profit, right? There's no reason for you guys to end up holding the trade for too long. Because again, you know you have 40% on the table. You are taking 40% and going to bed. That is the point. If you're someone that still struggles with this, it's because you're either being too greedy or you're being too emotional. The point is, figure out how much is enough. And I give you guys a rule of thumb. If you are someone that is doing 3 to 5% a day in terms of profits, you are beating most traders that do that in a week. Yes, I spoon feed you. Yes, I give you guys a trade. Yes, the trades are easier. But the point of the conversation is get in the habit of taking what's on the table. If you are up 8% and the market is extremely volatile, then take the 8% because that's 8% you never had before. So I hope that makes sense, right? Anyways, I'm going to end the stream there. Thank you guys so much for coming. And of course, if you guys want to join the leverage, the link is in the bio. If you guys want to join the Telegram, or if you're new to the channel, it is completely free. I just linked it for you. If you are new, just join in. The Telegram is a free channel. And I will see you guys later. Enjoy your weekends. Please trade safe if you are trading. It's not worth your time right now to be stuck in a trade setup. We are heading into weekend volume, and of course on weekend volume there tends to be a lot of manipulation, so I hope everyone is good with that. And once again, thank you guys so much for watching, and thank you guys so much for liking the video. I hope you guys have a wonderful weekend, and I'll see you guys on Sunday night for the next trade setups and everything else. All right, peace out.